You might think financial news is just for Wall Street, or that currency talk is only for economists and traders. But in reality, the value of the US dollar is something that quietly shapes the world around you, even if you never set foot in a trading room. The strength of the US dollar affects your daily life in ways you might not expect. Every time you buy groceries, fill up your gas tank, or shop online, the dollar's value is working behind the scenes, influencing prices and choices. When the dollar is strong, your money goes further abroad. Great for travel, making vacations and international purchases more affordable. You might notice your hotel stays, meals, and souvenirs cost less in other countries, but it also impacts what you pay at home. A strong dollar can mean lower prices for imported goods, but it can also put pressure on American businesses that export products, sometimes affecting local jobs and wages. American companies selling overseas face tougher competition, as their goods become pricier for foreign buyers, which can affect jobs and profits. This ripple effect can be felt in manufacturing towns and corporate boardrooms alike. On the flip side, imports get cheaper, sometimes lowering prices for things you buy, like electronics, clothing, or even your favorite snacks. This can help your paycheck stretch a little further, especially when inflation is high. Small businesses and online shoppers also feel the impact. If you run a business that imports goods, a strong dollar can reduce your costs. If you shop from international websites, you might notice better deals when the dollar is up. The dollar's strength reflects global confidence in the US economy. When investors trust America's stability, they buy dollars, which pushes its value higher. Recent surges in the dollar are tied to new job data and expectations about Federal Reserve policy. When the Fed hints at raising interest rates, the dollar often strengthens, affecting markets worldwide. These shifts influence everything from your morning coffee to the price of imported cars. Even your favorite cafe might adjust prices if coffee beans from abroad get cheaper or more expensive. Whether you're planning a trip, saving for a big purchase, or just shopping for groceries, the dollar's journey is tied to your wallet and your future plans. So, keeping an eye on the dollar isn't just for investors, it's about understanding the forces shaping your financial life. Being aware of these changes can help you make smarter decisions, from budgeting to investing. The latest news signals economic tides are turning. Staying informed helps you spot opportunities and avoid surprises. Knowing why the dollar moves helps you prepare for what's next, so you can protect your finances and plan with confidence, no matter what the headlines say. The US dollar index, often called the DXY, is a key financial indicator that measures the value of the US dollar relative to a basket of major world currencies. It's a tool that traders, investors, and policymakers watch closely to gauge the dollar's strength on the global stage. The index is made up of 6 major currencies: the euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and Swiss franc. Each of these currencies represents a significant trading partner of the US, and their combined movements help determine the index's value. Among these, the euro has the largest weight, making up more than half of the index. That means changes in the euro's value have the biggest impact on the DXY, so when the euro weakens, the dollar index often rises. This week, the index surged over 0.8%, reaching its highest level in 5.5 months. That's a significant move in currency markets, where changes are usually measured in fractions of a percent. Such a jump signals that investors are actively seeking the safety and stability of the US dollar, especially during times of uncertainty or market stress. So, what's driving this demand? Recently, expectations have shifted. Investors now believe the Federal Reserve will keep interest rates higher for longer than previously thought, in an effort to control inflation and support the economy. Higher US interest rates make American assets, like Treasury bonds and savings accounts, more attractive to global investors. This increased demand for dollar-denominated assets pushes the dollar's value even higher. The dollar index acts as a barometer of global confidence in the US economy. When the index rises, it often reflects optimism about America's economic prospects compared to the rest of the world. When other regions face economic challenges or political instability, the dollar becomes a safe haven. Investors flock to it, seeking protection from volatility elsewhere. The recent rally in the dollar index highlights how the US is currently viewed as the most resilient player in the global economy, with its markets and currency outperforming many international peers. But it's not just about numbers on a screen. It's about trust and confidence. The world chooses where to park its money based on stability, opportunity, and safety. And right now, the US dollar is the top choice. The dollar's rise tells a story of relative strength, global uncertainty, and shifting economic tides. It's a reflection of how investors view risk and reward in today's interconnected world. By keeping an eye on the dollar index, you gain valuable insight into the broader economic landscape and the forces shaping global markets. For now, the dollar is leading the pack, standing strong as the world's preferred currency in uncertain times. The Federal Reserve's decisions on interest rates ripple through the economy and your wallet. Whether you're shopping for groceries, planning a vacation, or saving for retirement, the Fed's choices can impact your daily life in ways you might not expect. When the Fed raises rates, borrowing gets more expensive. Think credit cards, car loans, mortgages. Monthly payments can rise, making it harder for families to afford big purchases or refinance existing debt. Even small changes in rates can add up over time, affecting your budget and spending power. For months, many expected the Fed to cut rates soon, hoping for some relief. But new data, like stronger than expected job growth and persistent inflation, changed that outlook, making a rate cut less likely. Now, there's only a slim chance of a rate cut in the near future. Investors and markets are adjusting their expectations, and that uncertainty can lead to volatility in stocks and bonds. Why the shift? Strong economic data, especially jobs, suggests the Fed will keep rates high to fight inflation. A robust job market means more people are working and spending, which can keep prices elevated. Higher rates make U.S. assets more appealing to global investors, boosting the dollar. When investors seek higher returns, they buy more U.S. dollars, increasing its value worldwide. When you see headlines about the Fed, remember, it's not just about loans or Wall Street. The Fed's decisions send a global signal, influencing currencies, trade, and economies everywhere. Trillions of dollars move based on these decisions. Banks, businesses, and governments around the world react instantly, shifting money and investments. Right now, the signal is clear. The U.S. dollar is in demand. This demand can make imports cheaper, but it can also make U.S. goods more expensive for other countries. This affects everything from investment flows to the price of goods on store shelves, and even the cost of traveling abroad. The Fed's stance is a key reason the dollar is surging. Investors watch every word from the Fed for clues about what's next. Understanding this helps you see why the dollar's value matters. It shapes your purchasing power, your investments, and even your travel plans. It's all connected to your financial world. The next time you hear about interest rates, remember, they're more than just numbers. They're the invisible force shaping your everyday financial decisions. The latest U.S. jobs report was a mixed bag. More jobs added than expected, but unemployment also ticked up. This means the economy is growing, but not fast enough for everyone seeking work. The conflicting data makes it tough to predict the Fed's next move. Strong job growth usually means higher rates, but rising unemployment could argue for cuts. For now, the strong jobs number has convinced many that the Fed will wait before making changes. This uncertainty is fueling the dollar's recent surge. Investors are betting U.S. rates will stay high, making the dollar more attractive. The labor market signals are driving global currency moves. A strong dollar has real-world effects. Traveling abroad? Your money goes further. Hotels, meals, and shopping are cheaper. But for foreign tourists, the U.S. becomes pricier, which can hurt American tourism. U.S. exporters face challenges as their goods become more expensive overseas, risking sales and jobs. On the flip side, imports get cheaper. Think electronics, clothes, and wine. Sometimes those savings reach you at the store. But American companies must compete with cheaper foreign products. The dollar's strength also affects global commodity prices. Oil and gold are priced in dollars. A stronger dollar can mean lower oil prices for Americans, but higher costs for other countries. The dollar's moves ripple through trade, travel, and your shopping cart. Winners and losers shift as the currency fluctuates. It's a balancing act with global consequences. Understanding these impacts helps you make smarter choices. The dollar's strength is more than just a headline. It's in your everyday life. As the dollar climbs, the Japanese yen has hit a 10-month low, sparking concern in Tokyo. A weak yen helps Japanese exporters but makes imports like food and energy pricier for locals. Japan's government is warning it may intervene to stop the yen's slide. Intervention means selling US dollars and buying yen to boost its value. Japan last intervened in July, spending billions to prop up the currency. Analysts say any action now may only slow, not stop, the yen's decline. The real driver is the gap between US and Japanese interest rates. Japan's new stimulus package adds pressure, raising questions about fiscal health. Policymakers face a tough choice: stimulate growth or defend the yen. The yen's weakness is a direct result of global currency battles. The dollar's rally is shaking up currencies worldwide. The euro is down, making US goods pricier for Europeans and travel tougher. The British pound is also losing ground, while both have gained against the struggling yen. Commodity currencies like the Australian and New Zealand dollars are falling too. Investors are moving money into the safety of the dollar, leaving other currencies weaker. This synchronized decline shows the dollar's central role in global finance. The Fed's focus on fighting inflation is pulling money toward the US. Few currencies can resist the dollar's momentum right now. The global market is repricing expectations for US policy. The dollar's strength is setting the tone for currencies everywhere. Cryptocurrencies aren't immune to the dollar's surge. Bitcoin and Ether have dropped sharply, hitting multi-month lows. When investors get nervous, they sell riskier assets like crypto and flock to the dollar. Higher US interest rates make non-yielding assets like Bitcoin less attractive. The opportunity cost of holding crypto rises as dollar returns improve. The dollar's rally is cooling the crypto market. Recent moves show crypto is tied to broader market sentiment, not separate from it. The same forces driving the dollar, Fed policy, economic data, are hitting digital assets. As the dollar flexes, crypto feels the pressure. Even decentralized assets can't escape the dollar's shadow. What does a stronger dollar mean for you? If you're traveling abroad, your money goes further. Great news for tourists. But if you work for an exporter, it could mean tougher times as US goods get pricier overseas. Some imported products may get cheaper, but don't expect huge price drops. The dollar's strength reflects global confidence in the US economy and expectations for high interest rates. It's a mixed bag, good for travelers, challenging for exporters. Understanding these shifts helps you make smarter financial decisions. The dollar's moves shape everything from vacations to shopping. Staying informed means you're better prepared for what's next. The strong dollar is a sign of US stability in an uncertain world. It's more than a headline. It's part of your financial reality.